Hi, I'm Jay Norris, author of Mastering the Currency Market. Welcome to the report. Before we get into it, I need to remind you that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're looking at are real-time market snapshots and may not be replicated going forward. First market we're covering is the Australian U.S. dollar. AUSD had the big down day yesterday, Thursday. You didn't see any follow-through today, though. Very, very interesting. It's below that trend line. No matter how you cut it, that's a significant technical development when you close below a trend line of that length, intermediate term trend line like that. Very, very interesting. Your lagging indicator, the MACD, is below zero also. So I think you have some more downside. I also think that overall that's a very healthy development in a long-term bull market if you were to get a correction. Very interesting week in the currencies. Let's go to the euro next because you would have thought, who would have thought the euro would have been so strong, and that the Aussie, which is the big carry trade, would have been so weak. But you have to admit, overall, from a macro standpoint, this is a very healthy development. The euro held up, and the Aussie, the one currency that you can afford to let a little bit of air out of it, is the one that corrected. So you gotta like this week. I mean, if you're you're a fan of a healthy macro global economy, you gotta like the way things are shaking out very recently. Weekly trend shift on the euro here, that really opens up the door to 40 and above. 135 really wasn't a sticking point at all. I think it was key that we closed above that weekly directional line Wednesday, and then that really opened up the door to a very nice rally in the euro. You could see I was actually given a workshop on price pattern. Price pattern is so simple, but it's so important. Look at this. There's a low, there's a higher low, and this is an overall higher low too. They snookered you there with that little bit of a lower low, but you know what? That only counts. You need you need 2 or 3 closes below a significant level like that. So that low held, the trend lines gave way, this trend line gave way, and that's very significant. So weekly trend shift back higher in the euro opens up the door to a test of 140. Next market, we'll get to the pound U.S. dollar. The pound coming back too. Really shook off that sell-off from yesterday. Your daily trend arguably, flat to lower. You're below the yellow line. However, the weekly's up. So it's looking good to the pound. To me, it's testing 160 right now. Let's, if a market tests a key level like that, it's not going to hang. If that key level is going to prove to be resistance, the market's not going to hang around up there. I mean, granted, it really couldn't get a significant close above that level, but it's right back there. So we can't rule out a test of the November highs up there around 163. Let's take a look at this guy on the weekly, too. Let me go old school, all the way back with that trend line. Well, you got a confluence of resistance. It'd be a ways before you could get to that. The trend line at least. But, watch that monthly direction line at 163. You penetrate 163, it's going on. Here's the higher low, and just barely a higher low there. So, it doesn't look too bad. That MACD looks good too. So, the pound looking good, and I think overall it's healthy. It's a healthy thing that you're letting a little air out of the Aussie too. So honestly, from a global standpoint, you couldn't have asked for a much better week to calm things down in these asset class markets. Let the Aussie correct. That's probably a healthy thing overall. Next market, the dollar CAD. One of these days, I'm just going to cut the CAD there. It's kind of boring. Well, it turned around. You had a shooting star yesterday. Fish around above par. I'd say they blew stops above the buck there, the big figure. And now you had to change direction back lower on the daily. So the weekly held. You bent the weekly, but you couldn't break it, so the weekly's back down. So everything's back down. Actually, the monthly You can see your monthly directional line, the weekly directional line never moved, and the daily shifted back lower. So I think 95 overall is where you're coming up there. I think CAD's going to benefit from dollar strength potentially. Next market, because we share that big wide border with the Canadians. No matter how you cut it, Canada is always going to be a very rich country. On the other hand, though, they're blessed with natural resources. But on the other hand, you're never going to have consumer spending like you have south of the border from Canada, and that's just that. But very, very wealthy country, Canada. So I could see, where you open the door to 96, if not 95 overall. It seems to be where it's pointing. The chief. This is really starting to look like it'd be distribution on the top. This is really starting to look like accumulation to me with these big wide price swings. Down, up, down. I've been saying it for a while. I think you're in a position here to put a long-term bottom in. Let's take a look at the weekly. There you can see you're very definitely at historic levels. Let's take a look at the monthly. It's even more pronounced. I'm actually doing a workshop for our Trading 101 live workshop, and we go ahead and we show the population pyramid. I'll have to pull it out one of these days. We show the population. We compare the population pyramid to the U.S. and Switzerland, and you can see how yes, they definitely had an advantage earlier in the decade. However, that's going to swing back. You just don't have a consumer class like you do in the States here. Switzerland's an aging country compared to the U.S. So long term, you have to question whether this overall trend can continue. It's not quite a thesis in my mind yet, but I think there's a strong possibility that you're going to start to see a long-term bottom being sewn in here. And that's a 25-year bear market, people. So I think at some point that guy reverses higher, and demographics in the long run are going to start to favor the United States, which has you'd never hear people talking about it, but the U.S. has a pretty big population, percent of population in their 20s, in their teens, in their early 20s. And so they've got a lot of people, coming into the workforce. And as we know, those young people like to spend money, don't they? So that's a good thing overall. And so my as I said, it's not a thesis yet because I want to see a monthly shift. But currently the weekly's up, the daily's up in dollar Swiss, and I think you're in the slow, drawn-out process of carving out a bottom, similar in dollar yen. And similar in dollar yen, your weekly's up, your daily's up too. It could be a big development. It'll be big technically when price closes above 84. That doesn't mean you're going to see a rocket north. That doesn't mean you're going to see an acceleration. A lot of times, big market changes happen very slowly, barely noticeable, but slow and steady, much like the stock market rally we've seen over the past couple of months. So I think maybe dollar yen is closer to having carved out that long-term bottom than the chief is. Dollar Swissy, that is, I refer to that as the chief. So this is one to watch. You're probably getting closer to a long-term bottom. Let's take a look at the monthly too, so it'll give you perspective. There you go. I can turn off that. There we go, and you only see the monthly directional line left. So, I mean, that's just a big, long-term, drawn-out bear market, and when it goes, it may just slip silently, just silently, really not noticeable when you do turn this guy around. But eventually, I'm guessing it will turn around, and we'll be here when it does. And I think something to look for will be a close above 84. Close above 84 could be a harbinger of a long-term bottom in place, and we look forward to bringing that to you when it occurs, if it occurs. That's a dollar yen. Hey, let's look at the U.S. stock market, and then we'll wrap it up. You couldn't reverse the daily back higher, so the daily's still lower. I think it's pretty obvious which way the direction is here. And I think based on that, we could say that this is your intermediate term trend on the daily. That intermediate term trend daily is telling us you're still in a relatively low risk environment. Nothing wrong with a correction here. Not too terribly surprising given the Aussie big asset class market gave you a nice correction. So no surprise the S&P 500, the blue chip stock indice with those big dividends is doing the same. So we'll have to see how far down that correction takes us. A correction in a bull market and an asset class market is a very positive thing. It relieves any stress that may have built up. So I think overall that's a positive thing. And so we'll look forward to see how this market reacts off support below. Hey, my name's Jay Norris. Look for my new book, Mastering Trade Selection and Trade Management, in bookstores in the spring. And again, we did the deal with McGraw-Hill. Thank you very much.